brain afterwards. He's like, you know, if you own a house, you're required to have homeowners insurance. The chances of an insurance company paying out because your house is burnt to the ground and having to pay you for building a brand new house is about 36,000 to 1. You're required to have car insurance of some sorts. You drive a vehicle. Chances of you totaling the car and the insurance company just giving you a check to go buy a new one, about 1,400 to 1. In terms of needing some sort of long-term care in your life is 1 in 2.
That freaks you out when you told me that last week. Okay.
Right. So even if you double it to 1 in 4, that means it's either your household or your neighbor is going to need some sort of care. Okay. And again, that care is very, very broad in terms of the definition, but it's something that we need to prepare for. And that is the fastest way to ruin a retirement. Because if you want to go to the full-blown side in terms of dementia or Alzheimer's, in the Austin area, you're talking around $9,000 to $10,000 a month in terms of being at a recovery, at a full-blown memory care. My parents have a dear friend of theirs for 45 years up in New York. I think it's closer to $15,000 a month. And she's been in there since she's, God, 61, 62 years old, and she's 70 now. She's healthy, doesn't know where she is, doesn't know any of her friends. She's recognized her husband, but now because of COVID, he hasn't been able to see her. It's heartbreaking in terms of when it gets to that point, and then it's financially heartbreaking that it just destroys everything you've worked for. Okay. So Virginia, I know you got your mic on. Any questions so far?
I haven't seen any. Oh, yeah, Kim,
Okay.
Can we hear you yet, Kim? Oh, crumb. I still don't.
Virginia, I don't know if you can control her microphone. You might be able to.
I did. I have her unmuted from my end. I think she's having a problem getting unmuted on her computer.
Okay.
Kim, can you call me at 512-818-0988. Looks like she's right. Oh, okay. Hang on. You know, we use all forms of technology. We don't discriminate here. Look at this.
All right. While you're doing that, I'll kind of touch on.
Okay. Now let me move. I have to move out of the way so we won't interfere. Okay. Yes.
Okay. So what I'll touch on is, okay, I'm hearing these numbers. I'm hearing these statistics. You know, I don't have $10 million here. I can't self-insure. Where do I begin? If someone's just like, I know I need something, and realistically, I would rather be in my house than at one of these facilities, if it is at all possible. Then we can start with something what's known as home health care insurance. And it's a nice gap filler between what is considered recovery care and what's considered long-term care. And let me just give a definition from the insurance company's perspective of why do I keep on using these two terms and separating them? If you have a heart attack, a stroke, an event that you should be able to recover from in under 12 months, that's the insurance company's definition. In under 12 months, they call that recovery care or short-term care. If you get a diagnosis of Parkinson's, of Alzheimer's, of MS, where that can go on for more than 12 months or years, that falls under the long-term care basket in terms of the definition. Okay.
Howard,
So,
just a minute. Kim, speak again. Let me see if she thought she changed something. Can we hear you now? Okay. Oh, I'm hearing you through the phone. Okay, Kim, we're not. I'm gonna let you. I'm gonna have Howard follow up with you because yours is very specific, and we will follow up afterwards. Okay. Sorry about that. She did
that's okay.
have had a specific question about a situation with her brother undergoing chemo, then fell and broke his hip, and now he's anyway coming home. But that may be a little bit more specific than what we want here. But I did volunteer you to follow up, Howard. I'll help.
Got it.
Okay, sorry, go right ahead.
Yeah, so Virginia, we went over the definition of recovery care versus long-term care, the event being 12 months or less versus more than 12 months, okay? So if someone's just like, I know, God willing, I don't have to go into any of those facilities, even though some of them are quite nice. I'd want to do everything at home if at all possible. Then something like a home healthcare policy is a nice little bridge in terms of getting you by or helping you for those first few months to say, okay, now we need to really plan in terms of what the heck are we going to do, okay? So I'm not here to try and pitch any specific company, but there is one that we really, really like because the healthcare questions aren't intense. It's more like, do you know you're going to have surgery? Is there an upcoming surgery that you have scheduled or you have to have that you haven't scheduled? If that's the case, they're going to say no right now. Are you just coming out of the hospital? Or are you currently having some sort of therapy? If you are, they're not going to cover that right now. But if you bought it today and then you got hit by a car tomorrow, then yes, that will kick in. The home health care literally is for home. So it is not for an assisted living or memory care type of facility. It is strictly to be used at home. It also has 360 days of coverage. And there's various services, whether it's occupational therapy, physical therapy, a home health aide, an actual nurse that comes to your house. Each service is, if you use any of those services, that is considered one day of services. If you happen to bunch a couple of them together, so if you had a physical therapist and a nurse come the same day, then even though it's two services, it's still just one day of use. And this one gives you 360 days. It doesn't have to be I don't want to mention the company.
No, that's fine. No, I mean,
yeah.
Okay.
But it gives you 360 days of use. It does not mean 360 consecutive days. Okay. So if you have a physical therapist coming to your house Monday, Wednesday, Friday, that's 3 days. If you have a nurse coming that Tuesday, Thursday, then you're using 5 days. But if you can have the nurse come the same day as the physical therapist, it's still only 3 days of use.
Okay.
They kind of do it in age brackets. So about every 5 years, the rate does go up, okay? As long as you are in before 85 years old, that seems to be the magic number for all of these insurance policies. So as long as you have not hit your 85th birthday, you can get into these. And then there's levels of benefits in terms of how much you're willing to pay as a premium compared to how much they'll provide if you need the service, okay? So that's kind of home health care in a nutshell. Then we move up to the other side in terms of saying, okay, you've got one, if we've exhausted that or we're saying, I want something a little bit more broad, now we're looking into long-term care policies, okay?
Let's go back for this one where you were with the home care, home health care.
Yes.
Home care. It can, now, for that, can it be non-medical? I mean, like Visiting Angels does not provide medical. Whereas if I have a medical group coming in, how do they count? How would Visiting Angels, or would it pay for their home care?
Yeah, the answer is that if a doctor, this does fall under medical in one way, and that is they're looking at what they call activities
Okay.
of daily living.
Mm-hmm.
Okay, and there's 6 ADLs when you cannot. You're talking in terms of going to the bathroom, bathing yourself, being able to get dressed, being able to get in and out of a chair, in and out of your bed. Can you cook? Can you feed yourself? Okay, those are the activities of daily living. When you cannot satisfy a minimum of 2 of those 6 ADLs, then a doctor will say, yeah, we need some sort of therapy for you to do. Okay. And that's when these policies will then say, okay, you're satisfying that requirement that we need. Now we'll start reimbursing for this. Okay. And what's really the other really nice part about like this home healthcare policy, whether Medicare is paying or not, they pay you directly. So if you want to think of it as kind of double dipping, because there is some therapy built in, like if my dad just had knee surgery, okay, he's been getting physical therapy. If he did some of it at home and he did some of it at the hospital. If he had this policy, even though Medicare was paying the physical therapy at home, he could have submitted a receipt to this home healthcare policy and kept the money. Okay, it's completely independent of Medicare.
Mm-hmm.
All right. So now we'll jump over to the long-term care side. Long-term care can have home health care benefits built in, and then we'll have assisted living and memory care, usually to some degree, built in. Okay. It's definitely, these things are designed in terms of assisted living and memory care, so it definitely has that. It's just a question of if you're doing things at home, rules and regulations, things like that. But these companies know it's cheaper for you to be at home than it is to be in the Brookdales of the world. Okay. So they're happy to pay for someone to be at the house with you. In terms of long-term care, there's 3 different ways to kind of pay for this. Okay. The first one is long-term care the way that you're thinking about. Similar to car insurance. You pay a premium, you hope you never use it. Insurance company hopes you never use it. You pass away, they walk away scot-free. Okay? Steve has been doing this longer than I have. In all of his time, I think he has told me he has sold 3 policies in a roughly 6 years in the true blue long-term care fashion. Okay? Because those premiums, they just flat out got it wrong. The insurance companies, when they started this 25 or so years ago, they thought people were not going to live as long and they would not be in nursing homes for as long as they have been. And so when you hear people that have policies and they say the premiums have gone up 30%, that sounds about right. John, to put it in perspective, John Hancock runs the long-term care for the government, really more for senators and Congress and presidents and stuff like that. They finally went to the government and said, we have to raise the rates. This was like 2 years ago. Okay, how much do we have to raise them? It was something like 95%.
Whoa.
1 year. They just said, we can't continue to do this. It's either you drop it or we pretty much double the rates on you. They doubled the rates. I mean, that's just what they needed to, that's what they said yes to, okay? So the insurance companies flat out got it wrong. It's why General Electric went down the toilet. They finally had to take an $8 billion loss. And so we look at the true blue long-term care and say it's got to be such a unique situation for it to make sense that it's not the way we recommend that people do this. Okay. The best way to insure for this is what's called asset-based long-term care. And so I'm going to use very, very broad numbers just so you get the concept of it. So please don't count this as the numbers I say are gold, okay? But it is a combination of using the assets that you have with a long-term care policy as kind of a leverage point. So if you're able to put in $100,000 into this, if you need it for long-term care, depending upon your age, it will go up to, let's just call it a $300,000 bucket for long-term care. And that should get you roughly 3.5 to 4 years of long-term care. And then once that money is gone, it's gone. But let's just say that you put this money in there and you never need it. Does the insurance company get it? No. What it will do is it will convert into a life insurance policy. And let's just say the life insurance policy, where the death benefit proceeds might be $170,000. And then that goes to whoever you want, whatever heirs that you want it to go. The third thing is, let's just say you have this policy for a couple years and you come back to Steve or me and just say, Howard, I don't want this policy anymore. You can get your $100,000 back. Policy goes away, but in some way, shape, or form, the money that you, at a bare minimum, the money you put into it is going to come back to you or your family. Okay. Now, some people might say it's like, well, especially not right now with the market going up and down. It's like, well, I could have put that money and gotten, 8% a year on it. Yeah, that's the risk that you're taking. Okay. That's insurance. That's the definition of insurance, is to protect from a catastrophic loss. So if you have the capability of putting some money aside into one of these policies, you got that leverage component for if you need long-term care coverage. Okay. Now, the couple downsides of it is the older that we are that we want to do this, the less leverage there is. So if we're closer to, let's say, 75 to 80 years old, instead of 3 times leverage, it might be 2.2 times leverage. And again, I'm just making numbers up because everyone's unique. The other thing is that there's going to be a health questionnaire, because this has that life insurance link to it. All right. So, but that is just a real fantastic way to know, like, there's no way that I'm losing on this deal. Whereas with True Blue long-term care, it can sometimes feel like, I don't know if this is ever going to pay off. Not that we're looking to go into, a nursing home or into assisted living. I don't think that's on anyone's bucket list. But if they just keep on outpricing us that we can never do this, then it just feels like it was money that was sunk in and we never got a benefit from. So that's kind of the second way to do this. The third way is to link it with what's known as an annuity. And an annuity can be nice because it can give you that stable income. And then we can have what's known as a rider that has long-term care benefits with it. And so the way that something like that would work is, I'm throwing numbers out there, so don't hold me to, as gospel in terms of the numbers. But let's just say we put $200,000 into an annuity, and that gives us $1,200 a month. Someone's I'm hearing someone.
Yeah, I'm gonna hang on, Howard. I'm gonna mute everyone and then unmute you so we can get
Okay,
rid of the background noise. So hang on with me,
sure.
Larneen. Okay. Oops. Now you went away. Okay. There you are.
Okay, good. So, right. So this annuity with a long-term care, what they call a rider. So again, let's just say that you put $200,000 into this annuity, you're getting $1,200 a month, and then you need to go um, into long-term care, assisted living, or memory care, or whatever it is. Let's just say assisted living. This rider, and again, every company is different, but just kind of the general idea, this rider will be in place for about 5 years, and it will double your current income that you're receiving from the annuity. So you would receive for that 5 years that you're in assisted living $2,400 a month versus the $1,200. The reason why they use 5 years is statistically, on average, most people are in one of those facilities at most 5 years. Okay. After the 5 years is up, it will go back down to the $1,200. Okay. The next question some people might be asking is, okay, what happens if I exhaust everything? Or I'm married, do both of us have to go down to zero, and then what happens? Okay. And again, high level can start to get really, really nuanced, but this is, again, real broad, and we'll keep it at that. If you're single, at some point after you have exhausted your assets, then the state will kick in. Okay. So Medicaid will take over. If you are married, even if you're single, you are still allowed to have a primary home that the state, that can still be as part of your assets. If you're married, and this part's very key, you will have to spend down to about $125,000 of assets before the state will kick in for your spouse. So I'm going to pick on the men because they're the ones that usually pass first. Husband goes into assisted living. You're spending down the assets, $7,000-8,000 a month for the assisted living, whatever it is. You get to the 125,000. Now the state's going to help in terms of paying for your husband. Okay. And the reason why they do that is because they don't want to take care of two seniors that have nothing. They want to make sure that the spouse who is still able to function on their own is not destitute. Okay. And so I'll just leave it at that, because then you're really starting to get into stuff that we can get into rabbit holes, and I don't want to, I want to try and keep this as broad as possible, because I'm sure there are questions, and getting into the details like that just can drive people crazy.
Well, and I appreciate that, because I think you have given us a lot of general information, and our heads are spinning now as to what does this really mean. But
Yeah.
hopefully it can cause us to think of appropriate questions. Do you want us to go ahead and open it up for questions, or did you have something else you wanted to share first, Howard?
No. I mean, that's the very broad scope of, long-term care, recovery care versus long-term care, the interaction of Medicare with that. It has to be a specific medical event. And then, yeah, just how do you go about planning for this? Because that's what's unfortunately is going to bite most of the people in the butt, and they just think that Medicare is going to pay for all of it, and it just doesn't.
Okay, Catherine has a question. Let me see. Okay, whoops. Just a minute. Okay, try again, Catherine.
Can you hear me now?
Yes. Mhm.
Yep.
Okay. All right. My husband had a 10-year long-term care policy, mostly paid. He died before he could use any of it. I have a 3-year policy. I have my last payment in September, and then it will be fully paid. My son has been encouraging me to go into a life care facility. And I asked the question of them, so if I'm in life care and you provide assisted living within the facility for me, how does that work with my long-term care policy? And kind of the answer, which was kind of vague, was, well, they pay you directly because you apply, you tell them you're in this facility and they pay you directly, and then you use that for your monthly payments for our facility. Have you heard of that before?
The answer is yes. It just depends upon how each company wants to work. I think, and I'll go back to Brookdale just because I know, unfortunately, the person that I knew had to move back to Louisiana that worked for Brookdale. But I think they may have had it arranged that the long-term care policy just paid Brookdale directly. Others it will be like, yeah, you will basically get a monthly deposit on the first to then write a check over to the facility. So, yeah.
So if you initiate the policy and say you need 4 months of long-term care, and then you are able to go back to the independent living portion of the facility, do you still have the remainder of your long-term care policy?
We would have to look at what the actual documentation says, but in a broad answer, the answer should be yes. Okay. Now, one other thing, Catherine, that you have to look at is sometimes there's a waiting period.
Yes, I have a 30-day wait.
Right. Okay. And a lot of these, usually it's a 90 or 100-day waiting period. If you try and have it for day one, those premiums are absurdly expensive. Okay. Even 30 or 60 days. And people will be like, I don't understand, like, how did they choose 100 days? Okay. This goes back to the Medicare part. Okay. Because most people are going to start thinking about long-term care after there was a medical event. All right. So just think of someone that had a really bad stroke. Now, and in theory, you have 100 days of skilled nursing care. And so that's the reason for the 100 days, is that the first 100 days is covered by Medicare. And at day 101, when Medicare stops, now all of a sudden the long-term care policy kicks in. So that's the reason why you might see a 100-day waiting period.
Do they overlap though? If I have a 30-day wait period before I can use my policy, does that 100 days with Medicare count as my 30 days?
Yes. And that's the reason for the waiting period, is that
okay.
The insurance companies know how to play this game. They're saying, okay, if Medicare will cover the first 100 days, we'll be more than happy to let them do it. And on day 101, your 100 days is now done. The waiting period, they can see when you had your medical event. You're going to need long-term care now for the rest of your life. And then, yes, it just slides right in. But again, broad sense, to go back to your first question of, if I only need it for 4 months and then I slide back to the independent living, in theory, you should still have 32 more months remaining.
Okay.
I don't want to say it's a blanket answer unless we can actually see the policy.
Yeah. It's a crapshoot.
Yeah. But very good question.
Because we paid for the 10-year policy and wanted to use it, and couldn't do the 30-day wait because he was in the hospital, and the long-term care people said, too bad, so sad. And then we just kissed that money goodbye.
Now, we have to be prepared, and and that's
I have my policy, and I will not. I'm so glad I have my last payment in September.
okay. All right. Other questions?
Thank you.
Thanks for asking, Catherine. It kind of made a nice case study type situation for people. Other questions people have? I just think so often things like this, the more we learn, the more we hear. For some of us, it makes us realize, oh my gosh, there's so much more I need to learn or need to understand. But, I hope that this is sort of giving us some information, and I think it's good information that people can build on. Go back and look at what you have, and we will, in a follow-up, I'll make sure that they have Silver Key benefits contact information if they want to follow up. Other questions? Anne, did you have a question, or Anne got it? Your roses look very pretty by you, Anne. Okay, any more questions?
Yeah, I have a question. Is it Marvin?
Yes, go ahead, Marvin.
Yeah, both Sandy and I have a long-term care policy. And it kind of falls along with what he was talking about. Was a 90-day waiting period, and it lasts for 5 years, and it has a cap on daily expenses that they'll pay. Of course, when I talked to the insurance agent when I bought this was the best thing since sliced bread. But
Of course.
is there a way of somebody, just an independent person, reviewing these policies and telling us what we really have?
Yeah, I mean, we would be happy to take a look at it for you, Marvin. And again, this goes back to what the heck does the policy say in there? Like Steve and I sat down with a family, and we looked at it and said, because now the premiums were getting up there, it said once the premiums hit this point, the cumulative amount of premiums that you have, you can technically stop and the policy is still active. Like the amount of benefits will be less, but the policy doesn't go away. Like you can just say, I'm not paying anymore. It hit this clause that you guys wrote in there. So I will have this policy kind of on the side that I don't have to pay into and have to worry about the premiums going up and up and up. They never knew that. And so again, that's why, with having a group like this, it's hard for me to give very, very specific answers. But to answer your question, Marvin, absolutely, we would be happy to review it just so you know what you've got. And, there have been times we've seen other policies where I'm just like, someone said, we've been paying on this for 12 years and the premium is going up 20%. I looked at it, I was like, this looks like a freaking great policy. It's for life. It was like, I don't know, $280 a day. I think there was still an inflation rider on it. And the premiums weren't absurd yet. I was like, I know I wouldn't be throwing this away. And so, yeah, just each one is unique. But the only way we can give you, Marvin, an answer with what you've got is to see what you've got. Hopefully that makes sense.
Yeah.
So,
all right.
We never want people to abuse, our professionals' time, but, there is the possibility for someone to do kind of a consultation with you, and then or you and Steve or whatever, and then see, I know where, do a consultation, and then if it becomes more involved or if you could help them with something, but I think we all use good judgment about that. But is that sort of a fair statement, Howard?
Yeah. I mean, just to understand in terms of how we get compensated.
Good, that will help.
Yeah, we get compensated in two ways. Number one is by the insurance company itself. So when and I'll just use Medicare to make it super easy. When people contact me about Medicare, especially when they're turning 65, the guard immediately goes up in terms of, do I have to pay you? And the answer is no. It is part of the marketing budget of the insurance company for us to know their products, okay? And so we're looking out for you in terms of what makes the most sense for your specific situation, because the situation that Virginia has is different from the situation that Marvin has, okay? And so not every, as much as United Healthcare would like to say that everyone should have United Healthcare, if they're more expensive for the exact same widget, there's no point to use United Healthcare. We'll use someone else, okay? The second way that Steve and I get compensated is by referrals. We come back, we tell you, you've already got the best plan out there. It's already at market rate, or Marvin, your long-term care policy that you have is fantastic. Yeah, if it goes up, do not throw this away. All right, you got to just have it in your budget. I would hope you would take that as, God, these guys were honest. I would want them to succeed, and I will tell my friends, if they've got a question, call them. That's the way we get compensated.
Okay, all right, well,
Great explanation, Howard, and I think that's what a lot of us do. You know, we provide the service we can, and sometimes we do more, and it may, you know, but spread the word. That's what we're doing there. Okay, thanks for
I
that.
assume I
Okay.
can get you, yeah, I
What
assume
was
I can
that,
get
Marvin?
I assume I can get the contact information for Howard from you, Virginia?
Yeah, I'm going to send an email right afterwards, and it will have their contact information. Okay?
All right,
I
thank you.
think Gary had a question.
Yeah, Gary has a question.
Okay.
Oh, yeah, in a second. Hang on. Let's see. Okay. I've unmuted you. Can we hear you?
Thank you for unmuting me.
You're welcome. You behaved, so I unmuted you.
I appreciated Marvin's comment and question because Kay and I both have long-term care policies, and we probably had them, I would guess, maybe 20 years. And yes, the premiums, they tried to increase those 4 or 5 years ago, but one of the options we had is that we could limit the amount of care and not activate the increased premium, but we would continue to have the premiums. And I guess I was a little confused a little bit about the overall presentation, in that I wasn't sure where the presenter was going with this, but I think in relative to answering Marv's question, I think Kay and I would like to probably set up a meeting to go over our policies so we have a better understanding of what we had 20 years ago, and events change. So from that standpoint, it's probably a good time just to review everything to be able to understand where we are and what the options are. So from that standpoint, I'm waiting to hear how to set up an appointment, and I certainly appreciate what I've heard so far.
Okay. And I will, you and I can follow up, Howard, as to exactly what phone number, email, whatever you want to give, and how we set that up. So, but that will be going out this afternoon. So, and also, yeah, we'll just, that will be going out. Okay. Yeah, you're right. It causes new questions in us, but for many of us, it's saying, oh, this is something perhaps I need to tune into and see what I do have or where gaps might be. And I truly believe that from Steve and Howard are not out just to sell products. They're really helpful to people. You know, what are your needs? Like he said, if you've got a great policy, yay, celebrate you, you're fortunate. If there are gaps, they can share products with you that could help fill in those gaps. So, and like we said from the beginning, for all of the people for those of us who work with Seniors Living Smarter and with our sponsors, we're very committed to providing the education for people. And I think Howard has given, those kinds of examples that now when their schedule gets completely booked with all of us, then he may send me a bill. But anyway, we'll trust it all works out. Other questions? Oh, wait, Steve's here. Well, now that was good timing, Steve. Were you there?
He's there with a big old fish.
What does he do? So I think it's pretty clever. You waited and let Howard do all the work, and then you show up. Look at that. There is Steve. Yay.
That's teamwork.
That's great.
He comes in at the end with all the glory. Yeah.
Gonna take all the accolades and say, wow, weren't we great? Oh, we haven't muted it. Well, that's appropriate too. Hang on. Okay. I think Howard has really done a nice job, Steve, of explaining the overall, and it's always hard how much detail do you go into, but I think we've had good questions, good follow-up, people who will want to visit with you all for some consultation to make more sense of what they have, but I think they would be going into consultations with more information than just,
Does he
not had
come,
benefit.
question?
Yes, Kay.
Does he come to one's home to visit with you, or does he have an office where clients go?
Very good question. Of course, everything is different in this day and time. So what do you all do, Howard and Steve? Somebody explain your process.
Well, that's
Look,
actually
he can speak. Amazing. Hi, Steve.
that's actually the reason I was late. I'm in the process of moving offices, and the guy who is coming to basically take the space over came an hour early. He was supposed to be here at 11. He got here at 10. So I was like, oh, oops. Yeah, well, you're here from San Antonio. Let's go ahead and get this done. So I was negotiating all of the office stuff. We're planning on reopening an office up in Georgetown.
Yay!
I can't reveal my super secret location yet, but I'm actively negotiating these now that I've gotten this one done. So for the moment, we're either coming to you, we can meet you somewhere public like a Starbucks, or we can do Zoom, whatever you're more comfortable with, because the office is not available as of, let's say, midnight tonight.
Okay.
But we should be doing here in a month or two. I'm expecting to be back with an office in Georgetown now. Yay! Come August.
Okay. But in the meantime, if people contact you and figure out the best way to get together, I know it's questionable even if you go into Starbucks, if we can, so it can be figured out or done virtually or whatever. I'd have to see, I might be able to office, we've been very strict in not allowing people in our conference rooms or training rooms, but I could see if I could help out too in the meantime. They're opening up a little bit.
One of the things that we may do is an interim measure, because I wasn't sure that this deal was going to happen. This whole deal has come about in 3 days, which I rushed. I said, hey, we'd like to move to Georgetown. We'd like to, cut our lease early. And 3 days later, we're done. The deal's over. So I mean, it's been, I've never moved this fast on something real estate related in my life.
All right, so you all can be part of the process. We'll observe how this all goes. Gary, you have a question or comment?
I just have a comment. Those of us
we may
that
get
already
a temporary office space or something.
Okay. All right. Hang on a minute, Steve. Gary has a question or comment.
I was just going to make a comment to the last speaker about opening an office. Those of us that already have long-term care policies, and if an event occurred, I think we have a little bit of time with Medicare so that we don't have to be urgently setting up a meeting. So I appreciate the opportunity of being able to do it. And there's no real urgency since they don't have an office opened up yet.
Well, that's a good point to make. And again, every situation is different, but I bet people can figure it out. Ann Gowdy has a question. Oh, just a minute. I'm forgetting my job here.
Can you hear me?
Yes, we hear you.
We're right at a point of perhaps needing to talk to somebody about the policy that we've had for, 12 or 14 years. It's a policy different from what I'm hearing the rest of you talk about, in that it was for a 4-year period of coverage, but we can divide that or apply it to one of us. It's one policy for two people. We kind of felt like that was hedging our bets. And for about 10 years, the premium didn't go up. 2 years ago, it went up a little, and they sent a letter in advance giving us 3 options, basically. And it stayed that way for 2 years. We've just gotten the premium notice for this year, or the advance letter, offering us again 3 options and an increase. And we're right in the process of debating in the next 30 days what to do. I'm not sure a virtual meeting with someone would be helpful because you would need to see our documents if we wanted to talk to one of you. So I'll be interested in contact information because given some of these new options, I had not heard anything at all about Howard's option number 2 that he mentioned. And I don't know whether it would be feasible to, as you said, stop and hold on the policy that we put money into, and that money would stay there. And we may never need it, or we may need it. You don't know what to prepare for in terms of being prepared. But there might be some advantage to choosing one of the 3 options. And it would be interesting to hear a professional, dispassionate perhaps professional, give us some input on that. So I'll look forward to your contact information.
And some of those, it might depends on how many paper, and sometimes we can scan paperwork so they could read it ahead of time, perhaps, and I don't know. But people are creative, and I bet we can figure out ways to get you the information in the timely manner you need it, because you do need your information sooner than. The only problem for some of us waiting is we continue to wait. We forget to follow through. We won't mention any names about that, but anyway. Other questions? Gary.
I don't have a question, but I see the flowers on next to Anne, and it reminds me for all the women on that it's appropriate. Happy Mother's Day coming up.
Thank you.
Well, thank you, Gary. Very nice. A little different this year. We don't quite know what to expect. Okay. Well, I think, and I do promise the email will come out, and I'll talk to Howard and Steve after this. And then Kim, I'm going to arrange a call with you and Howard and me, I think, or anyway, I'll get them in contact with you because you did have a more detailed question that I think they could maybe help you with. Anybody else have anything? Well, thanks for being the brave souls for well, we did a casual just get caught up coffee a couple weeks ago. This was our first content virtual coffee, and I think there's some nice things about a small group like this, that being able to interact. I will send the email out. You all can let me know how it worked for you and anything else we need. Other than to say thank you very much, Howard, for sharing the information. Steve, thank you for supporting Howard and not telling Howard he had to come help you with the office space. We would have been up at Creek then. So, but both of the guys can help us in many ways. We'll get that information out to you. And right now, our next planned event is back to a virtual webinar on May 21st, how to stay safe. What is the title? Becoming more aware of the threats around you. And we will have officers from the police department with us. We will be addressing physical safety issues, since those have raised their heads this year, as well as scams. And so I think it too will be a very helpful day. And if there's not anything else, we'll go ahead. And again, thank you for reminding us of Mother's Day, Gary. Happy Mother's Day to the women here. And everybody stay healthy and well, and call if we can help you with anything, and you'll get their information. Okay?
Thank you.
All right. Thank you. All right. Okay. Bye-bye.
All right.